What's up, traders? Anthony Crudele here, and thank you for tuning in to the Futures Radio Show podcast. It's that time of year again, Russell Reconstitution, and I've got two incredible guests joining me, Catherine Yoshimoto from FTSE Russell and Paul Woolman from CME Group. We're breaking down how companies move in and out of the Russell 1000 and 2000, why that process matters, how it drives market flows, and how traders, both retail and institutional, can use futures to manage volatility, risk, and capital during this major event. Whether you're hedging exposure or looking to trade the rebalance, this episode has what you need. Let's get started. Today's podcast is sponsored by FTSE Russell and CME Group. FTSE Russell is the home of the Russell 2000 Index. Did you know that with an 81% share and $1.5 trillion in institutional assets benchmarked, the Russell 2000 is the top choice by far among institutional investors? Like all Russell U.S. indexes, it's rules-based, transparent, and reliable. Regularly updated with the latest IPOs and annually rebalanced. To learn more about FTSE Russell and their products, please go to FTSERussell.com. This podcast is brought to you by CME Group. Whatever the obstacles, CME Group provides the tools that global market participants need to manage risk and capture opportunities. With 24-hour access to futures, options, cash, and OTC products across all major asset classes, you can drive your trading strategy forward with confidence and precision. CME Group, where risk meets opportunity. Catherine and Paul, welcome back to the show.
Thank you so much for having us.
Thanks, Anthony. Great to be back.
It's that time of year, Catherine. Russell Recon. We're going to start off with you, and just to get an understanding, how were the companies selected or removed from the Russell 1000 or 2000?
Great question. So our full ground rules are on FTSE Russell's website. There is a Russell Reconstitution landing page. The rules that determine whether a company is added or removed from the Russell U.S. indexes at Reconstitution are outlined at a high level. It must be a U.S. company. It must meet the minimum market cap size, which is $30 million in total, as well as a minimum traded price of $1 on rank day. So rank day, April 30th this year, is a really important day for all of the information for the companies to be in. And again, I just touched on a few criteria, but there's also investability considerations like minimum 5% voting rights for the company, as well as minimum 5% float for the share class. So at the end of the day, we are transparent in our rules. And then the determination of the Russell 1000 and 2000 membership is based on the total company size by rank. So each company's market cap is calculated total shares times price. Its market cap is calculated, then sorted largest to smallest. And the 1000 stock determines the breakpoint between the Russell 1000 and Russell 2000. Now, there's also a banding in place to make sure there's very little unnecessary turnover between the Russell 1000 and Russell 2000. So each year, if a Russell 2000 stock has not exceeded the band to move into the Russell 1000, it'll stay in the Russell 2000 and vice versa. If a Russell 1000 stock has not declined below the band for the Russell 1000 to move into the Russell 2000, it will stay with the Russell 1000. So that's just a quick overview of how the reconstitution process works for the Russell U.S. indexes.
No, perfect. Thank you. And we'll put that link in the YouTube description and on our website for people to go directly to see that. Let's talk about the thresholds. What is the threshold to get into the 1000 or the 2000?
So this year, the breakpoint between the Russell 1000 and Russell 2000, like I said, around that, between that 1000 stock and 1000 first stock was $4.6 billion. That's roughly unchanged from last year. Now, because of this band, a company as large as $7.4 billion could have stayed in the Russell 1000, in a much smaller company below the $4.6 billion band might have stayed in the Russell 1000. So those are the thresholds around that breakpoint.
Paul, I want to bring you into the conversation. For CME Group, what impact does the annual Russell Reconstitution have on trading volumes, volatility, open interest on CME Group's Russell products?
We do see elevated volumes and open interest around the reconstitution period. And really, if you think about it, it's such a big trading event. There's over 3,000 stocks which might be traded around the Russell 1000, Russell 2000 reconstitution. And so if you're an institutional investor or a retail investor even, and you're trying to have a portfolio of stocks which are trying to track these indices, you might actually want to outsource some of that operational burden to an index product such as a future. And a lot of clients choose to do that over this period of time. And so in terms of, if we look at last year for the futures themselves on Reconstitution Day, we saw that volumes were about 50% higher than throughout the rest of June. And into that run up of the reconstitution, we saw clients moving into futures, and that's represented by open interest growing by approximately $3 billion last year. Another thing which is often overlooked, but there are other risks to consider just than the beta risk of what you're trying to track. So in terms of dividend exposure or dividend risk associated with these indices, that's changing because the constitution of what's inside these indices is changing. And so there we see clients using dividend futures in an elevated way around this period as well to manage some of that dividend risk. And there's also financing risk around this too, in terms of how easy some of these stocks are to finance or repo out. And we see clients using the total return futures we have available at CME, the adjusted interest rate total return futures. A lot of those are used over this period around June, targeting the June point to try and manage some of those financing risks. So there's other types of risks to manage alongside the actual directional and beta risk of the Russell 1 and 2000 futures.
I was going to go to see if CME did any preparation for this, because we talked about how much of a volume boost you see. But before I even get into that, I think it's smart for us to talk about the different choices of futures that they have to use at CME Group during this time.
Yeah, that's a good question and a great to point out. So we have a variety of futures available. So if you think about it, on Russell 1000 and Russell 2000, we have E-mini size futures. So the larger standard future that a lot of institutional clients trade. But we also have micro versions of those futures. So micro versions of the Russell 2000, that's 1/10 of the size of the parent E-mini. And a lot of clients use that both on the retail side, but also for some institutional clients, it's useful to use that to fine tune some of their portfolios where needed, using those smaller size futures. And then, like I say, depending on if you're trying to manage other risks around the complex, we have style futures, so value and growth versions of both the Russell 1000 and Russell 2000. And that they're very popular, especially at times of regime change, which you can argue we've seen this year with the Trump administration. So that can be important in terms of clients moving between the value and growth versions of these indices. And then lastly, in terms of managing certain risks like dividend risk or financing risk, we have dividend futures available, and we have total return futures. So all of these things are widely used by clients.
Boy, how far we've come in the future space, huh, Paul, to have all of these different kinds of futures and tools for large investors, small investors to be able to utilize during these times. It's pretty incredible to see how the evolution of futures has come along and how much of an important role they play in so much of what happens in the finance space. But quickly, before we get back to Catherine, is there anything that CME does at all to prepare for this, or is this just like any other day, all the products are out there, go ahead and use them, we're always prepared?
There's nothing special that we do per se for this event itself, other than obviously trying to alert clients to all the toolkit that's on the shelf there. But one of the important functionalities that we have, what we haven't mentioned so far, and which is very popular into this period, is the functionality called BTIC. That stands for Basis Trader Index Close. And what that allows clients to do is trade a future tied to the official index close. And this is great for clients coming into this period who have got new inflows into Russell 2000, Russell 1000, or any of the complex around it. And if you just want to outsource that risk straight away into an index-based product, BTIC allows you to do that in a very seamless, easy to trade manner. And that way you don't have to buy all the stock portfolio. You can just move that new AUM straight into futures over this period. Similarly, if you already have a stock portfolio, you can use BTIC to potentially migrate on the close into futures. Or we have another functionality called EFRP, or exchange for related product. And what that allows you to do is switch a portfolio of stocks or ETF into a future and vice versa. And again, that's widely used over this period of time as clients move out of their stock portfolio into futures, and then subsequently post the event might move back into their stock portfolio.
Catherine, we'll go back to you. Similar question. Any specific preparation that FTSE is doing? I mean, obviously, we're sitting here talking with CME Group today. We'll be talking with CBOE. How much communication is going on between you and the other exchanges, and maybe any specific things that you guys are doing at FTSE in the background to prepare for Russell Recon?
Certainly, in terms of preparation, it is a big trading day. It is one of the busiest trading days in the U.S. equity markets, and by that standard globally, right? The U.S. being the largest market in the world. So Recon Day, June 27th this year, is anticipated to be a very busy day. So that's why FTSE Russell is an index provider. We make sure that the market is well informed ahead of the changes that are coming. We do talk to the exchanges, NYSE and NASDAQ, for example, for their, just their awareness of the calendar and schedule, even in advance of the announcement day. So May 23rd was this year's announcement day. Rank day, again, was April 30th. And then our website gets updated with the Russell 3000 and microcap additions and deletions beginning on May 23rd. And they're updated every Friday going into the Recon effective day. Now, I will also call out that there is a query period, 2-week query period from the announced date to make any adjustments that are necessary to fine tune the membership, any updates that might be required. But then from June 9th, the membership will be locked down. And from there, we continue to prepare into the close of Russell Reconstitution, June 27th. So generally speaking, again, we've seen large amounts of trades. I would say over the last 5 years or so, the volume at the close across NYSE and NASDAQ has exceeded of $100 billion over the last 5 years. And then last year was a record, almost $220 billion traded across the close, across NYSE and NASDAQ. Now, I want to bring back to Paul and why he's here talking about the futures. I hear that futures and derivatives are a good way to hedge risk going into that close, right? And all the traders, all the index fund managers, they are preparing going into that close to make sure they're not disrupting the market, right? And so that's actually why, we have, for example, the closing cross with NASDAQ, right? To close at one trade, one price at the close of the trade, and as well as just keeping tabs on what is going on in the markets. Obviously we have to keep track of holidays. Like now we have Juneteenth to worry about in June. But, I would also comment on the fourth Friday for June for Russell Reconstitution being effective is an important date because, that was actually very thoughtful in terms of, we don't want to double up with the S&P and triple witch options expire on the third Friday of June. So that is specifically why Russell Reconstitution's effective date is the fourth Friday of June and not the third Friday of June.
Oh, that's good to know. I didn't know that. All the years we've been talking, I did not know that was the reason for that. But that makes a lot
One
of
of the
sense because
reasons,
otherwise you
yes.
have really, yeah, one of the reasons, yes, no doubt. Otherwise, like you said, you have a really, really busy day across the board, massive volumes. So I want to understand a little bit more about the preliminary phase and then like that final phase, right? So you're saying June 9th is that time period where by June 9th, we know who's going to be in the 1,000 or 2,000. Is that correct?
Yes, that's right.
And so basically, these companies leading up to this are waiting to see. It's got to be like, and where am I going to land? Is that really how it is? And I know it's an automated process. We've talked about this a lot in the past, and you guys aren't going and just going, we'll take you and we'll take this one. It doesn't work that way. It's an automated process. And so these companies are, I'm assuming, their final numbers are coming in and then they're being chosen purely based on, statistical reasons on why they end up moving into one or the other.
That's correct. So Russell US Indexes is widely known as transparent and based on an objective rules-based process. That being said, the data could have some differences, nuances. So, sometimes updates need to be made if, let's say, the nationality determination is different from what was, what the initial data showed, or voting rights or float clarification. So there are some additional elements, but usually, we can count on not questioning the close price or, the security type, right, of the company. So it's generally, I would say, if I were to pinpoint some of the reasons updates might need to happen, it's because of nationality, float, and voting rights perhaps needed some clarification during this query period. But largely, we were announcing the membership of 3,000 stocks. There is no banding at the bottom of the Russell 3,000. So, we know there's roughly 3,000 stocks, and they are included based on, the band applies based on current membership. And that's, again, to minimize turnover. But for the most part, the company's Russell 1000 or Russell 2000 membership is set on that announcement day, May 23rd, and some of the updates may be due to some of those elements I mentioned earlier.
Got it. Thank you, Catherine. Back to you, Paul. Because we know it's going to be a busy time, I'm curious, does the exchange change margin requirements? Do they make any risk adjustments during this period?
That's a good question. The answer is no. In terms of margins, they don't fluctuate because of the reconstitution itself. The only reason that the margin would change was because there'd be higher or lower volatility over a period of time compared to the previous calculation. So actually, no, margins won't change. But margins are a good topic to bring up, because that's another potential benefit of moving into futures, in that it is a very capital efficient product with margins typically in the 4 to 5% range for Russell indices. And at a time where capital is very precious for a lot of clients in terms of balance sheet and how that's potentially constraining some of the things that they can trade, actually what we see is a lot of clients move into futures because of that capital efficiency, and that frees up capital in the rest of their portfolio to manage in other ways and generate yield, etc.
Got it. A question about IWM. I know this is a futures show, but how much is there any communication with the people that host the IWM product? I mean, you got to assume during this time period, the futures are playing a big role in what's happening in Russell Recon. Is there any sort of impacts or conversations between the IWM folks and how the futures are potentially working together? I'm just curious how that unfolds.
Yeah, I wouldn't say there's conversations per se directly on this, but I think, when we think about the ecosystem, all of the products play their part. So you have the cash market, you have ETFs, and you have futures, and you have options. And all of that intersection of liquidity is very important. But we think about liquidity, that's ultimately what a lot of clients care about. And when it comes to liquidity and points of price discovery, we find that futures trade around 4 times more per day notionally than all of the Russell 2000 ETFs combined. So the futures is a point of price discovery, plus it trades around the clock in terms of pretty much 24-hour availability and liquidity. But in terms of thinking about arbitrage channels, using futures to help manage creation redemptions, using BTICs against NAV, all of these things are interrelated. And that's where clients and liquidity providers are very adept at understanding how all of these things connect and are interacted together, and they will choose what mechanisms and what trading vehicle is best for them at that point in time.
Got it. Catherine, back to you. I'm curious, is there any historical trends that you noticed during this time period?
I would say, I think what surprises some people is that actually the June tends to be a lower volatility month. That's generally thought because Russell does such a great job communicating with the markets. We announce the upcoming changes well in advance, and so June tends to be a more stable month in terms of just volatility in the market. So I think some people are surprised by that fact, and I'm sure that it is also helped by the derivatives ecosystem as well as the liquidity. Russell Reconstitution, I would say, is viewed primarily as a liquidity event. Yes, there are changes occurring based on $10.6 trillion assets benchmarked. With higher volumes, I think NASDAQ has said that it sees maybe 30% increase in volumes for the Recon day trade. But that being said, I think generally speaking, the month of June tends to be lower volatility in terms of going into the close because the changes are communicated well in advance to the market.
Yeah, and I'll add on the future side. I mean, I add to that in that we see, like I said, about 50% extra volume on Reconstitution Day across the FTSE futures, and on BTIC itself, we see actually 3 times what we normally see. So, do see a lot more activity tied to that closing period, and people using the liquidity that is available both through the cash and through the futures tied to that closing period.
Yeah, that's a testament to all the preparation all of you do to get Russell Recon in a position to be able to really go out seamlessly. Probably most retail people never even know what's happening if they're not watching the show or going out there doing research. They just know markets continue as normal. Obviously, they'll probably see the spikes of volume in their charts, but aside from that, it's done flawlessly, and that's pretty interesting. It's pretty cool, and I want to stay with you just for a second, Paul, and pretty much kind of close out here, because I think that what I want to know is participation trends. How much of the participation are you seeing at CMAIL? Is this really an institutional day? Is this a day where you're seeing a big influx of retail? Are retail traders actually noticing this? I just mentioned that maybe they don't, but maybe they do. Are you seeing people across the board come in to trade Russell Recon? How does that look?
Yeah, I think that institutions are definitely very active here, that ultimately they're benchmarking to these indices and they need to manage these risks. So it's a very important day for institutions, and they're active across the board, whether that be managing that replication physically by hedging, trading all of those individual stocks, or like I say, outsourcing it to an index product such as a future. However, we have seen retail be much more active in Russell indices over the last few years. That's part of the reason why we launched micro version of the Russell 2000, and we've seen that volumes in that grow over time and be traded very actively. I think the Recon is a significant trading event within the calendar year and brings a lot of attention to the Russell indices, but as stocks move in and out between Russell 1000, Russell 2000. And so that is important for retail and as a signaling effect for retail between some of those companies. And thus retail definitely are involved around this period, wanting to trade both across Russell 2000 and Russell 1000 products.
I think it's just because the retail trader has become a lot more sophisticated. Technology has helped that. You guys as exchanges have helped that. Education, what we're doing here, I think is extremely important. People have become so much more involved in managing their portfolios, and with the different products at CME Group and with everything that FTSE is doing, it's an interesting time, because the retail trader isn't really so retail as much as they used to be. I mean, of course, there's always going to be new people coming in, but what is classified as retail is pretty wide variety of traders. Catherine, I want to end with you today. Same question I asked Paul. Is this more of a retail day, or is this more of an institutional day? Is it a combination? Is it more institutional? How does that look from a FTSE standpoint?
I would say it's probably a combination. To Paul's point, probably see a little bit growing retail activity, but largely still institutional because of the assets benchmark. We have a lot of institutional investors tracking the benchmark. So, and then a lot of that trading activity is going to be your ETF issuers, right? They are preparing to move their large passive assets into the close. They might be trading a little bit ahead. So, but then they want to minimize tracking error, right? So the goal for index fund managers is to track the benchmark as closely as possible. So I would say it's still a largely an institutional impact, but I think to Paul's point, we've definitely seen growing retail interest, right? I think Platforms like Robinhood, for example, right, has made trading more accessible, democratizing investing to the retail investor. There's like a lot more interest, I think, in trading in indexes in general. I would say, so I'm on the advisory board of the Index Industry Association, and we talk about how index knowledge, I mean, it's still nascent across the board, but there's definitely an growing interest to see, just learn more about indexes and how they impact the investment ecosystem.
Yeah, no, fantastic. Last thing, Catherine, I'm sure some people are wondering where can they get that final list of what is in the 1000 and 2000, and also is there any way to get notifications and updates for Russell Reconstitution?
Certainly. So for our public, I mentioned earlier the Russell 3000, Russell microcap additions and deletions are posted to our website. For the 1000, 2000, it's not as public. Our clients obviously have all the details, but there are reports that we do publish with some information, and after the close, usually the fact sheets will reveal the top 10 members, for example, and so there are resources on our website. So certainly encourage you to go to our website, and if you have questions, you can send an inquiry to info@FTSERussell.com.
That's right. Go to FTSERussell.com and, of course, cmegroup.com. Catherine and Paul, we do this every year. I can't thank you enough for taking us inside, behind the scenes of what's happening within the exchanges in this very important moment every year that happens in June with the Russell 1000 and 2000. Thank you so much for joining me today.
Thanks, Anthony.
Thank you very much.